there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Thursday. In today's program, I want to discuss the current rally we're experiencing in the market and whether or not it might be a fool's errand. Plus, a couple other things, and a currency pair in particular, which is taken my fancy. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out the way, let's get started. So there's this old saying in the market, which is, don't fight the Fed. Don't fight the Fed. Now, as we know, we've got a pretty strong rally happening in the market at the moment, and I want to sort of discuss whether or not the market is challenging the Fed and whether or not it's wise to challenge the Fed. In the defense, August has been quite a good month for US data. Let's go through some of it now. Has been quite good for US data. Unemployment, for example, is around a 50-year low at 3.5%. Very good. New jobs created in July was 528,000 new jobs, opposed to the expectation of 250,000. Again, pretty good. US initial claims came in today, slightly lower than anticipated, 262 versus 263. But again, there is a steady growth in initial claims because I speak about that a lot. But anyway, let's not dwell on that at the moment. And continuing jobless claims was announced today at 1.428 million versus 1.407 million, so slightly higher. But the big crunch of the matter, the big thing is, obviously, was yesterday. This is why we're seeing such bullish behavior in the market at the moment, was the US CPI, which was announced to 8.5% yesterday versus the 8.7% expected. In fact, the reading across the board was all pretty good. I mean, CPI month on month was 0%. Core CPI, which doesn't include food or energies, was announced at 5.9%. And core CPI month on month was announced to 0.3 versus 0.5 expectations. So that's again pretty good. However, let's take a little bit of a closer look at this. Let's put it under the microscope, okay? Because the big excitement is the headline rate, is the year-on-year, the 8.5. That's what's getting everybody excited, okay? But if you dissect it a little bit more and go into detail, we can see actually it's not overly that pretty a picture, okay? First off, okay, the food index in 12 months has increased by 10.9%. That's the fastest pace since May 1979. Nearly as old as me, that is. Nearly as old as me, that. And if we then dissect some of the food items, for example, butter is up 26.4%. Eggs is up 38%. And coffee is up 20%. Now, yes, we had a drop in oil prices. And this is why I think the headline CPI year-on-year, 8.5, it dropped a little bit. But despite that, energy prices are still 15.2% up from a year ago. And shelter costs, which includes rent and things like this, and it makes up 1/3 of the CPI, is up by 5.7% from a year ago. So what I'm saying is this, okay? It's very good that the year-on-year is lower than expected, okay? It came in 8.5, down from 9.1 from the last reading. Core has not changed, though. It's still at 5.9%, same as it was last month. So at the end of the day, inflation is still at 8.5% and core is still at 5.9% year-on-year. So it's still very, very high inflation. So the attitude I think the market is taking at the moment, they're either expecting a soft landing, okay, or a soft rate hike. Sorry, my throat's a little dry. A soft rate hike, which I think they're kidding themselves because the Fed still has work to do. Their target is 2%. Headline inflation is 8.5. Core is at 5.9%. So they still have work to do. And like I said yesterday, I think this positive data will just spur them on to be more aggressive. The market thinks they won't be aggressive because this data is good, but they will. In my opinion, they will. They will be aggressive. The chances of a 75 basis point rate hike in September is very, very much on the cards. So don't forget the CME Fed tool. It predicts it's 68% chance of a 75 basis point rate hike in September. They have said they want interest rates at 3.75 to 4% by the end of the year. So, in other words, is recession the only way to get to the 2% target? So how the markets are acting at the moment, they're challenging the Fed. They're thinking the Fed is going to be soft on interest rates. And I don't think, and like many analysts like me, don't think for a second they will. But anyway, for the time being, the rally is still continuing. Let's have a quick look at some assets right now and how they're behaving. First up, let's look at the euro. Okay, euro, like I say, like many currency pairs against the dollar, has had a bull run against it, because obviously we've got weak dollar across the board. It challenged this key level, which I saw at 1.03606, hasn't managed to break it as of yet. As you can see, it tested it, but couldn't quite break it. If we look at it on a daily, we can see why that level is key. So it's still trading just below that at the moment, currently trading at 1.0345. If we have a look at the sterling, which is another story I want to talk about in a little while. Yes, okay, it is currently above that key level 121.976, currently trading at 122.42. I think that this is a different story later down the line. The main challenge for it now is 122.900, which is obviously the top of the Bollinger Band on a daily. It is above the 50 simple moving average, but it's still way below the 100 and the 200 moving average. So I do still expect the sterling, let's let enjoy its moment at the moment, but I think the sterling is going to be a different story later. S&P 500. Okay, currently trading above that key level of 140 or 4,190 points, which is the 23.6 Fibonacci level on a daily again. Next real test is going to be around 4,283 for it. So again, it's having that bullish risk appetite on, because again, the markets are thinking the Fed's not going to move. Gold, not much movement on gold. This is again on a daily, currently trading around that key level, which I really, 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 really wanted to break, because I'm a big gold bug. As you know, $1,791 is the level, and it's still hovering above that. But it's still keeping its momentum, mainly down to the fact that we have a weak US dollar. Bitcoin, excuse me, I do apologize. Bitcoin, okay, is trading higher, obviously, because we have risk appetite in the market. Currently trading at $24,779. There we go. Seeing a little bit of selling around here at the moment, though. One bit of potential resistance, $24,904 at the moment. But like I say, again, risk appetite with Bitcoin as well. There is something else now I want to talk about. So, like I say, the bull run is still on, but like I keep saying, I do wonder whether the market is kidding itself, thinking the Fed is going to be gentle, because at the end of the day, the main reason why the number is down at the moment is because we've had a fall in oil prices. That's it. That's really the reason to drop down in energy costs, but it's not having an impact on food and other things people need to buy. So, okay, let's see how that develops. Anyway, on other news, those of you who are kind enough to join me this morning, I was talking about a certain entertainment giant and their earnings report. And like I say, they are indeed winning the stream wars. It was announced after market hours yesterday that obviously their earnings were a lot higher than anticipated. But as well as that, they have outshone Netflix. Their subscribers now lie at 221 million subscribers. Next to Netflix's 220 million subscribers. Pretty close, of course, but bear in mind, Disney was launched in 2019 and Netflix was launched in 2007. You can see how Disney's not only just closed the gap quite quickly, but overtaking them. So yeah, and obviously their earnings was extremely a lot better than anticipated as well. It came out at 22.5 billion opposed to 21.5 billion opposed to 20.99 billion. So, earnings did a lot better. Currently, it is very bullish. It's trading around about 9% higher. So let's have a quick look at Disney now as well. Okay, this is Disney as well. As you can see, opened with a gap, currently trading at $121.36. It closed on the section before, closed at $112.23. So you can see how obviously it moved higher on the back of that very, very positive earnings. The next challenge I see for it, not if I can see that getting there anytime quick, because obviously the stock market tends to be a little bit slower than, say, currencies, for example. $127.92 is where I can see a potential area of interest for Disney. So there we go. Disney's performing pretty well as well. There is something else I want to have a little chat about as well. I'm talking about a particular currency pair, which I do talk about. I don't talk about a lot, and I do trade this pair quite often as a hedge trade as well with the guppy. But it's a pair which it's got my attention a little bit. I want to discuss it with you. Basically, it's the euro sterling, and it's currently trading at a 2-week high. 2-week high. And obviously, the reason why it's performing against the sterling and it's holding its own against sterling quite well is, of course, don't forget last week we had the Bank of England raised interest rates by 50 basis points, which is the most aggressive move they've done with interest rates since 1995. However, it's what they said after the rate decision, which has affected the sterling more. And they basically said that they expect inflation to rise in the UK by 13% by October, 13% by October, and for the UK to fall into recession by quarter four. Now, there is some news coming out tomorrow in the early hours, 6 a.m. UTC, and we'll look at the pair at the moment. And this result could give the euro sterling a bit more of a bullet, again, increase the bullish sentiment is currently feeling. It's released at 6 a.m. UTC, which is UK GDP quarter two. Okay, expectation is for it to come in at negative 0.2%. The previous reading was 0.8%. And if we have a quick look of the last three GDPs for the UK, okay, end of 2021, GDP was 1.1%. March, 1.3%. And then June, 0.8%. And now the expectation is negative 0.2%. So if it comes in lower than expected, we could see a bit of a boost in the euro against the sterling. Let's have a quick look at that pair now. Because like I say, I talk about it sometimes, but not a lot. But I just want to I'm going to be keeping an eye on this certainly tomorrow and throughout the European session because it's looking pretty interesting. This is on the daily. Okay. The key level I see at the moment, for it is 0.84700. It's currently trading now at 0.8452. Now that's the key level I'm keeping an eye on. There's a little bit of buying or potential area of interest for buying around 0.8424, but I see the key level is 0.84200. So that's potentially a big area of interest, and it would be interesting to see what happens when the UK GDP comes out tomorrow. So we'll see if that gives the bulls bit more motivation to try and push this pair higher. So let's keep an eye on that. I mean, obviously, I think the Eurozone itself has its own problems, don't forget, and that's kind of come down the line, especially the energy crisis. But I think at the moment, the market is really more focused on UK bad news than they are with Europe at the moment. I think that's a story waiting to happen down the line. So anyway, keep an eye on this pair tomorrow, especially with the UK GDP coming out at 6 a.m. tomorrow UTC. So it'll be interesting to see how that develops. Don't forget, yesterday I announced a brand new Tixee Live series, okay, which I'll be doing very soon, starting next week, in fact, with the very first episode. And I need your people. I need your help. I need your help with this series, because this series is called #AskJames. And though it's still going to be market driven, it's not going to really focus on the market too much. It's going to focus instead on a topic of your choice. A topic of your choice. What I like you to do is anything you want to learn or anything you want to know, okay, in the comments, either YouTube or Facebook, just simply put hashtag Ask James and a topic you want to know. Now, like I said, there's one regular viewer, sorry, SMF 790. They've made a suggestion to do an episode explaining market jargon, like what a bull is, what a bear is, what a hawk is, long, short, etc. And I'm going to do a specialized video on that. But it doesn't end there. I want more topics, more ideas from you good people, or stuff you want to learn about. So just put in the comments, hashtag Ask James, and whatever you want to learn or whatever you want me to do, I'll dedicate a whole live video just for that topic. So I need your help. So remember, hashtag Ask James and the topic of your choice, whatever you wish. You're welcome. Hello there. Good to see you. So yeah, like I say, any topic, any subject matter you want me to cover, put it in the comments and I'll do a specialized live broadcast for you and for that, just for that. Okay, moving on. What's happening this week again? We're coming close to the week now. So obviously we've got UK GDP tomorrow. Like I mentioned, UK Michelin sentiment tomorrow. Okay, we've had better, lower reading in inflation, better unemployment. But how is the consumer feeling? Let's find that out tomorrow. That comes out at, what time is it? 2 p.m. UTC. So it'll be interesting to see how the consumer is thinking. So let's have a look at that one. The markets as they currently stand, FTSE slightly negative, 0.66%. DAX currently trading negative, 0.03%. And Eurostoxx 50 currently trading slightly higher, 0.01%. So don't forget, you can ask me questions anytime you wish, whenever I'm live. On air, anything you wish to talk about, or maybe simply just say hi. Tell me how your day is going. Or tell me your opinion. What do you think of, of the market, of this rally at the moment? Will it be short-lived? Or will it continue till reality kicks in September when the Fed is aggressive with interest rates? Show me your opinion or ask me a question. Or do the hashtag Ask James of a topic you want me to cover in the future. Anything at all. Okie doke. No problem. If you think of a question later, you can jot it down in the comments below, like either on YouTube or Facebook. I will see them and I will reply to them. I love your Star Wars references in the video this morning. It was about Disney, and Disney do own Star Wars, so I couldn't avoid the puns, unfortunately. But yeah, thank you. Anyway, like I was saying, if you think of a question later, put it in either the comment section in YouTube or Facebook. I will see them and I will reply to them next time I go live on air. So don't forget that. You have that option too. Anyway, if there is no questions, what I will say is if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this video, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and found it useful and you've put up with me, my most over-the-top, energetic personality towards the markets, which I just can't help because I love the markets, then give me one of these. It's nice to know that you like what I do. I can see I've got a couple of likes already, which I really appreciate that. I do. I really do. But anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.